So we're Emperor Metals. So we're located, our project, we have 2 projects located in Quebec, in the southern Abitibi. It's a tier 1 district. In this district, over 200 million ounces of gold has been produced. So it's a significant gold exploration camp and, well, development camp. Forward-looking statement. Yeah, so the team is interesting because we're part of the Metals group of teams, and it's led by John Williamson. He's the chairman of the board. He's a geological serial entrepreneur. He's developed about 20 different companies and had about 75% with successful exits. His cohort during those 35 plus years have been Sean Major, he's our CFO. So it's a great team. We have Alex Horsley, he's one of the best IR outreach persons I know to get in contact with investors. Ian Harris, he's an independent director. He's with Frank Justra's group. He's current CEO of Libero. Him and his team sold Corriente for $690 million. So they know how to work the capital markets. My name is John Florek, president and CEO of this company. I'm also a geologist. So I spent about 35 years in the business. First half has been in exploration. The subsequent half has been in production, both underground and open pit. I was worked underground at Hemlo Gold Mines, which everybody knows from the late 80s and onwards. And then most recently, I was a chief geologist up at Detour Lake Mine, which was subsequently sold to Kirkland Lake and Agnico Eagle. So I have half my career both in exploration, the other half in production, so I'm not afraid of either scenarios. Like I said, we're in this tier 1 district, 200 million ounces, lots of infrastructure around us, which we'll see a map shortly. So Quebec is recognized as one of the best provinces for mining. Everybody where our projects are pro-mining in the communities. So it's pretty exciting to be here. As you can see, this is a map of the southern Abitibi. Agnico Eagle is the dominant player in this camp. And those orange lines you see there, basically those are structured. It's basically the plumbing system that introduced gold into the district. And here's a map that's showing where all the 200 million ounces of gold were produced. Both of our projects are either straddling it or very close proximity to these plumbing systems that introduce gold to the district. Now, Duquesne West is our flagship property, and we'll go over that in a moment here. But one thing that I'd like to emphasize here is that the key thing about here is that we wouldn't potentially have to build a mill or a tailings dam because we're so close to this infrastructure. We view these properties as potentially satellite operations to feed for supplemental feed to the existing mills in the area, which a lot of them are under capacity. So very strategic the way we went about identifying these projects. And we used AI to basically identify and illuminate the exploration potentials of areas that were probably overlooked for a bit. So we're kind of using that technology to our advantage to identify these projects. One was Duquesne West, and the other one now that we just acquired, we just put a press release out last week, is Lac Pelletier. So Duquesne West, this is Duquesne West. Here's a quick cartoon. I figured we only got 10 minutes, Jeff, so it's a cartoon time. Right now, we built a conceptual open pit model. Originally when we sold this to investors, it was an underground only mine, but when we started our drilling in 2023, after we acquired this asset, we optioned it off of Globex. We started sampling all the core when we were drilling, and we realized that the host rock for these high-grade lenses of this deposit basically contained gold as well. So light bulbs went off, and we said maybe we have a large-scale open pit above this high-grade underground gold mine. Now, when we picked it up, it has a historical mineral resource of 742,000 ounces of gold with an average grade of 5.4 grams per ton, and about an average thickness of 5.7 meters. But after we put the open pit, we can see the huge opportunity for expansion. So from a kilometer to surface, we kind of expected to build about a couple million ounces. And then these deposits in the district, they go down to like 3 kilometers in a lot of the mines here. They start off under 1 million ounces. By the time they're done mining, they're plus 5, 10 million ounces. Some of them are 25 million ounce deposits. So great jurisdiction. This is kind of the vision. If we can build 2 or 3 million ounces from a kilometer up, then we can maybe double or triple it for an overall mine life. That's kind of the idea. So our 2024 program was trying to expand the footprint and sample a lot of the incremental gold in the host rock to have this open pit. Now, it's important to have an open pit because you can mine an order of magnitude less grade. So an underground mine might be 3 grams per ton. In an open pit environment, you could mine like 0.3 grams per ton. So that's the advantage. It's cheaper to mine. And so we have success in our 2024 program. We just put a press release out. In the open pit conceptual model, we were drilling an area that we were expecting to get about 1 gram, or plus or minus half a gram. And we drilled, we put it out, we hit within our own model. In the open pit concept that we developed here, we have 21 meters of 7.2 grams per ton. That's going to greatly improve. And we're seeing that bulk tonnage intervals in the host rock for these high-grade lenses of like 56 meters of half a gram or 8 meters of 0.6 of a gram. We also tried to extend the footprint further east, and you can see those grades. So yeah, we're expanding the footprint. We're excited about this project. If you look at the heart of the deposit, for instance, if you didn't have to build a mill or you didn't have to build a tailings dam, you could have a quick payback period because you don't have that $500 million or $1 billion expend to get that infrastructure in place. Quick payback period because you have, like in the heart of this thing, you have 15 grams per ton over 15 meters, or you have 13 meters of 20 grams per ton. So that helps with a quick payback period for an operation like this in the future. We're hitting visible gold. We put out some metallurgical results. You can look through it, but 90% recovery. We have no deleterious elements in here. So that's important for the majors to know if they want to acquire an asset like this. This is showing you what the heart of the deposit looks like. It's not a pinch and swell quartz vein, where sometimes you could have difficulty mining. This is replacement style, where it's thick, it's broad, very low sulfides, very low impact to the environment. So we really like that, and it's easy for a miner to follow. I've been underground, and we have some of those difficulties trying to find these quartz vein deposits sometimes, and this is something that the miners love. Beautiful geotechnical. Yes. This is the host rock. I did not drill this core that you see in front of you. Our company did not drill it. If you're an open pit geologist, this is stuff you want to sample. It's rusty. That's the sulfides that carry the gold. Some of this stuff I would sample for high grade. I don't know why it wasn't sampled. So we're going through the historical core, and we're seeing opportunities to add incremental ounces into this open pit. And we're going to plan and publish in a Q1 2025 mineral resource estimate, maiden for our company. So we have several news releases still for 2024, and that's going to be our exciting press release on trying to push this over 1 million ounces and continue growing this deposit. And that'll get the institutional investors and the majors to start looking at us more aggressively. Other properties like Peltier, it borders an Ecoego's Wasamac deposit. They have 3 million ounces on the Wasamac project. We have, we picked it up. As you can see, this deposit, it was at $1,600 gold. The previous people who had the property, they put all this development in place and they're ready to mine it. They did 2 bulk samples, okay? And it averaged about 4.35 grams per ton. They were ready to mine it, but then they got acquired. So we're excited. We were ready to pick up where they left off when this property kind of went orphaned in 2010. We see a lot of blue sky potential. So lots of opportunity to grow this. With our AI models, we think that we can grow this deposit significantly more, at least double it very quickly, and then put it on a path to over 1 million ounces. That's what our structure looks like. 111 million shares outstanding. We're only a $10 million market cap. Our analogs in the district of what we have are about $50 to $100 million. So stop by our booth. We can tell the story a little bit more in depth. Thank you.